Hey chums, video 6 of trying to invest in 100 crowdfunding projects. Each time I'll invest £1,000 if it meets my little investor checklist down here at the bottom. Now the reason I'm doing this is pretty simple, is because I want founders and investors alike to know what wins confidence and what loses confidence for crowdfunding pitches, because it's a great way to raise money for some companies. For others it's absolutely god awful. But anyway, having raised lots of money, invested lots of money, I'm not an expert in any way, but I do have an opinion. And that's what I'm going to share. I'll say everything out loud I would think when considering an investment, in case it affects how anybody else does what they do. So, now here we go. We'll do Crowdcube one more time. I haven't found, actually that's not true. I've invested in one company in Crowdcube in this series, but it was on a video that got deleted. Anyway, one more time in Crowdcube, they keep putting up like opportunities with the most insane valuations that are they're just idiotic. But anyway, so don't go by popularity because it's not a hype game. Let's go by new. I'm only going to UK. All right, Plum. Okay, I have heard of this business. I have heard of this business, and that number down there fills me with fear. But let's have a go. Let's see if somebody who invests £1,000 is likely to make a reasonable amount of money. Now, because this is established, and they're basically raising on, that I have a feeling this is part of a much larger raise. They're raising, they've got roughly £8 million. I mean, £8 million on 135 mil pre-money is fucking punchy. I mean, is it a VC round? If it is a VC round, the VCs would want a much bigger piece of equity. Okay, they've launched a cash ISA, Plum, Eurobank partnership with £10 million investment. Aims to be the number one fintech in Greece. Revenue has 2x year on year in the last 12 months, surpassing £16 million ARR. I mean, that's pretty good. That's pretty fucking good. £16 million in annually recurring revenue. Now, so 80% gross, don't know what their net is, probably actually really low because their overheads of development are probably going to be really high, but that's fine. It's a young company. So 16 mil ARR. If that were to be bought today, and of course, an investment is not an acquisition. Investors must keep this in mind. You are not valuing the business today at what it would cost if you bought the business and then, pro rata your slice. That is not how the calculation works in terms of valuations. You are trying to value the shares themselves. And that means you're basically gambling. You're saying, what are the odds that it will go up in future? And am I prepared to pay this odd today for that potential upside when accounting for whatever risk you believe there might be? It is not an acquisition. That's different. If you want to buy the fucking company, make an offer. All right? But okay, anyway, with that being said, if I was looking at this as an acquisition, because it is a good benchmark, it's just the valuation will be higher than the acquisition value. We're talking 60 million ARR. It's a fintech company. You're probably going to get 5x on revenue. Maybe 7 if you're lucky. Because I'm stupid, I'm going to use a calculator. Let's go 7. Let's be generous. 7 times 16. We're talking, okay. The valuation's all right. The valuation is, a little punchy, but it's kind of okay. Because let's just say, for example, let's go to their deck now. Let's go to the deck. Plum, fintech, no, let's go here. I want to see, because they've been operating for a while, financial projections now do matter. Now, if this was a seed or pre-seed stage company, I don't really give a fuck about financial projections other than to understand how they think about spending money and what are their kind of ambitions. Everything else is just nonsense. Okay, numbers. So there's £3 billion under management. I assume that's in current accounts and all kinds of things. Who is their underwriter? Okay, let's have a look at their existing investors. This is very important. 500 startups. That is legit. Ventura Capital. Heard of them. Don't really know. DMG Ventures. Don't really know. I mean, there's no one like tier 1 in that list as far as I'm aware. But still, Plum is on a mission to help grow our customers' money for life. So essentially, it's like a nutmeg. Probably what we offer. Okay, yeah, stocks, mutual funds, ETFs, crypto, pensions, whatever. Okay, so it's a trading 212 stroke Robinhood-esque stroke nutmeg type thing. It's a managed wealth manager or a robo wealth manager. Could be fucking huge. Like, what is, okay, here's a way. So trading 212 in the UK is probably the closest comparison. Let's have a look. What is the current valuation of trading 212? But its valuation to be between 73 million and 109 million. Since then, the company has raised $19 million in funding. Let's see if it's on Crunchbase. Trading 212. Yes, it is. Yeah, so they've raised £15 million. I mean, this is roughly comparable to Plum. I don't know the competitive edge to Plum by comparison to Trading 212. Do they have any kind? So, venture round, Trading 212. Who are their investors? 2 primary investors. I assume these are high net worths or family offices. That's just my guess. Summary. I mean, it's been going since 2004. But that just means that they started before the fintech wave began. That's fine. Okay, so right now, if Trading 212 has been going for nearly 20 years and is valued at roughly $100 million, probably at its last funding, which means it's probably $250 million right now. Let's just use that as a rough exit value. So here we go. Let's do the maths. Oh, no, I was going to do financial projections, wasn't I? Sorry, where was I? Financial projections. Because this will tell me their ambition and it will give me a sense of, 5x growth, 16.6. Tell me where they're going in the future. I do agree things like cash ISAs are about to boom. 2024, case study, whatever, blah, blah, blah. Okay, what's this? Plum Cash ISA is changing our revenue trajectory. We have seen a lot of net deposits. Yep. Makes sense. I'm a Trading 212 customer, by the way, which is why I know this. Money inertia. Yep, makes complete sense. Our financial position estimated. Come on! Where are you going? Where are you going? Why aren't you detailing your ambition? It makes it very difficult to understand if I'm going to get an ROI. So fucking simple. Why? Why aren't you saying these things? The growth is great, though. The growth really is great. You can't deny that. They're fucking nailing it. All right, let's go to my little checklist then. A few of these I can already tick off. Can the founders build themselves? Hell fucking yes. Does it work change behavior? Yes, fucking does. Is it a novel? Not really, but I mean, it's obviously something that works. Can I 10x my money? I don't know. Will I chat about it at dinner? Yes, I will, because I always like to talk about stupid things like stocks and shares, and I will say, oh, I just not only use Plum, I actually invested in Plum. I can totally see that happening. So the only question, will I make my money? Okay, here we go. So that's the only question remaining, because if I can, fucking great. Okay, it is EIS. Well, it won't be complete EIS. Now, here's the issue. EIS goes up to 5 million. Oh, no, it changed recently. What is the cap? The cap on EIS investment in the UK. Annual limit, yes, £5 million per year. Lifetime limit, £12 million. Okay, they're under that. That's fine. I imagine. I hope. They would say if they weren't. Okay, so 1.24%. Let's put this in. So 1.24% target raise is, what's 1 million? This is obviously they're raising to this is marketing. This isn't really fundraising. This is marketing, and Crowdcube knows it. So valuation 18, 8, whatever. What? That doesn't make any sense. Oh no, it's because I just typed it in. Damn it! That was supposed to do calculation, and I ruined it in a previous video. Oh man. Okay, pre-money. Okay, my investment tax relief, let's just assume I do get it. Expected dilution. Thing is, if they're at a scaling point, dilution from here, I imagine there's going to be 2 more meaningful rounds before an acquisition, and each one will dilute between 10 to 25%. And that will depend upon ESOPs, option pools, incentives to advisors, maybe some secondary buybacks, all those kind of things. So I don't think it's going to be as high as 60%. I think it's going to be 40%. I think I'm expecting a 40% dilution. Equity, so yeah, that means my equity is 0.00044% for £1,000. Okay, additional fees, that'll be £25 because that's Crowdcube. Expected acquisition. I mean, let's just say they get to £40 million in revenue, ARR. That would be generous. Let's say 50. In 3 years, they get to 50 mil ARR as they build on their momentum. So let's just say it's 50, and they're going to get 5 to 6 times revenue. Okay, so let's just say it's 50 mil. I feel like an old man typing this in. 50 mil, and let's just say they get 6x on revenue. Oh, sorry, that was valuation, wasn't it? Stupid. I don't make my money back. After all fees and whatever else, expected venture value. When you take into account fees, I'm just going to check this maths 1 second. Yep, I had a -1 in there. So, I mean, that's not amazing. Let's just say they hit the $500 million. I'll get 3x. Now, this could be interesting if you're like a venture investor. So this is in like a VC. And the reason like ROI is going down when you're a VC, when confidence in the venture goes up, you're kind of basically saying, look, this is almost a surefire bet from a venture capital point of view, because they will be almost certainly acquired in the next kind of 3 to 5 years, whether it's by a JP Morgan, or whether it's by a Goldman Sachs, or whether it's by some large major bank. You know, that's exactly what happened with Nutmeg. But for us little people, after all the preferential shares have been kind of paid back, and you go through all the cost of sale and whatever else it may be, let's have a look. Let's have a look at other things. Let's see what Nutmeg was bought for. That will help us. Nutmeg. So it raised $153 million. Okay. So Nutmeg was bought by JP Morgan. I do know that. So secondary market, that's probably all the small investors selling their shares. But they did an E round. So we're talking 1, 2, 3 more rounds. Okay, so maybe the dilution is going to be a little bit higher. Let's put that at 50%. 3 more rounds coming up. So I'm going to compare this to Nutmeg. How much was Nutmeg acquired for? How much was company Nutmeg acquired for? Can't spell, can I? Cost £700 million, so $1 billion. Okay, that's the model I'm going to use. Can they replicate nutmeg. And there is a good chance they probably can. And the reason for that is because JP Morgan bought it. Other big institutions are likely to follow. So this is good timing. This is really good timing. This has got a lot going for it. So, okay, let's just say it's £700 million. It's still, I can't 10x my money. There's no power law return for me. Ah! This is an example of a great deal if you're a VC. It is not a good deal if you're a crowd investor. So that's the lesson from this video. This video essentially says, I mean, there's a much better than even, probably a better than even chance I will actually get 3.5x my money. But even if I do, it's not meaningful because I've invested £1,000 and I get £3,500 back. What can I do with that £3,500? Make 3 more investments that probably have a much, much lower likelihood of return. It's not a big enough stake. Crowd investments are just not a big enough stake in this to matter. So let's just say, for example, if I invested, I don't know, 500 grand, just for argument's sake. Now, the ROI doesn't materially change all that much. Effective investment. Yeah, because that's it. Yeah, sorry. Doesn't change all that much, but I make a lot more money. You know, I make, you know, a good 700 grand on that deal. Now, the delta between 500 and 700 is fucking massive, but the delta between 1,000 and 3,500 is small. Yeah, that was hundreds of thousands before. So great VC investment. I hope they raise VC capital. It's just not a good crowd investment. What a shame. I'd rather put my money, my £1,000, into trading 212 on some ETFs that I know in 10 years' time is going to be worth 5 grand. So, no, not for me.